everyone, John Henry here, slingshotfutures.com. Welcome to the daily futures market outlook for tomorrow's trading. Tomorrow being the 28th of the month, wrapping up March with, man, one heck of a day, that's for sure. Again, the morning session completely dead. There's nothing happening in the morning session. And then 11, 12 o'clock rolls around, and that thing just goes absolutely nuts. We have the NASDAQ, the Dow, the S&P getting obliterated today. If you look across the tech sector, markets like NVIDIA, Netflix getting some really big dips. So a lot of stuff going on today, but didn't really start kicking off until afternoon. Go figure, right? Now, before we jump into the charts, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you're going to be able to sign up for our email newsletter list, so you'll be notified every time one of these videos comes out. Along with that, in the email itself, we go over a bunch of different things we just don't have time to talk about in the video, and that's going to be everything from stocks, options, crypto, Forex, you name it. If it's setting up, it'll show up in there at some point, so make sure to sign up for that if you haven't done so already, so you don't miss anything. Of course, also click on the live trade room subscription and trial info. From here, you're going to be able to sign up for a free 3-day trial in the live trade room, and that we can kind of hang out with us for a couple days and see what it's all about. Really good way to kind of dip your toe in, ask some questions, hang out with us for a few days, see how we approach the markets, how we analyze them, and all that fun stuff. It's just a great way to kind of get your feet a little bit wet in how we trade. So make sure to sign up for that if you haven't done so already. Now, looking at the charts, man, oh man, oh man. We have the euro, which is falling off of the highs pretty nicely. We have a nice bear type of new wedge kind of creating its way down, and we also have a possibility of that slight kind of ascending wedge, I guess, if that's what you want to call it. Not exactly the strongest thing in the world, but we have resistance holding at 25,320, and the market's pushing down towards support. Next level of support's at 24,440, and then we don't have anything until the unfilled gap a little bit further down around the 23,825s. So there's a decent amount of bearish pressure, and not just bearish pressure, but like we were talking about yesterday, we have that situation where they pop just above those highs, trapped, and then shot right back to the downside. That all entails, or that all including everything else, with the buyers doing the exact same thing over here, right? Taking some notes from previously. Exact same thing is happening here. Likely, if the market is going to repeat itself, we're going to see a little bit of a larger drop lower. Now, we can kind of dissect these two next to each other because they do look very similar. We have that high pullback, next kind of lower high, deep correction down. Retest of those highs just pokes up to a new high, then collapses down to a new low. Okay, so what do we have over here? Well, we have a push up to a new high, a lower high with a deep continuation to the downside, and then a retest back up to the highs, just trapping above that top, and now we're starting to see an immediate bear selling pressure amount coming in once again, and it's the same thing that happened over here. Now keep in mind, over here was a lot more drastic, it was a bigger move, but it's kind of like we took that and shrunk it down a little bit in size, because it's very similar. We have a nice bear drop to the downside. It wasn't quite bear engulfing over here, but close enough. We get stuck with a little bit of a small range back and forth for a little while, and then we see a continuation to the downside. So if the market's going to want to rinse and repeat here, there is a good potential that we do push down to test that 24,440, but even potentially further, because if we use this information to our advantage, we can see that this midpoint was the big turning area that the market fell off of. Well, this is our midpoint here, which means that we're looking for a drop on the euro down to 23,270 over the coming days, again, if they're going to rinse and repeat. And it looks, I mean, eerily similar to what happened the last time around. So overall, right now we're seeing a little bit of a stall that is expected. After such a big move, the euro kind of stalls out for a little bit. I mean, I can't really say that I blame them. I probably would do the same thing. You have a huge day and you just kind of want to kick back and not do a whole lot, So expecting the overnight session, now that we have that little bit of a bullish correction, a 1 candle pullback, maybe even a 2 candle pullback. Either way, they're looking for the sellers to regain confidence and shove the market down to at least 2440, if not a little bit further to 820, and then again, longer term objectives down to the 270s. Get that out of the way. Taking a look over at gold next. Now gold did get a push to the upside, and we did hit a couple things that we want to kind of keep an eye on. Now this area is of interest for a couple reasons, the 61.5. Now it's not a perfect level of resistance by any means, and keep in mind we did roll over. We are on the 618 contract. But the reason this kind of stands out here is simply because of the fact that if we look historically here and we go backward and say, okay, well what happened the last time we were here? We had a big candle gap inside of there. We had support, we had resistance, we had resistance. This is obviously an area of interest. Market participants are definitely playing this area quite aggressively, one way or another. Now, going backward a little bit, we could say that maybe we're dealing with a wedge top. It is holding pretty nicely in a very similar situation to the euro with a big bear engulfing candle. Unfortunately for gold, we don't have any, rinse and repeat patterns that we can work with from previous, but we are holding a nice channel top, wedge top, depending on how you draw it out. And it looks like the market wants to, definitely show some respect here. But here's the thing, right? This is, first of all, exactly what we were looking for. We have a 3-push wedge top to the upside. We have that pullback. We retested the highs. It literally did everything we said it was going to yesterday in the Outlook video. If you missed it, make sure to watch that one. But this is exactly what we were looking for going into today's price action. And with a big bear drop like this, the anticipation is that we're going to get a slightly deeper correction back into other areas of support, around that 1342.5, but it could be as high is up here, and we're testing it right now. And the reason that could simply be is just due to the fact that this is where the market found resistance earlier several times, right? It's definitely no stranger to this zone in terms of support and resistance, and we're right back there again. So not a huge surprise to see us bouncing here, and again, it played out exactly how we wanted to see it play out. It's just a matter of seeing how far they want to pull back. One other thing that a lot of traders usually look for after a higher low reversal to the upside, there's the bell, is seeing a slightly deeper pullback to maybe a 50%. That's going to be at 1337.5. Not too far away. So we do have a lot of things going on for gold. It's just a matter of what level of support they really want to stick with at the moment. But for right now, we do have a nice bear trend to the downside. Buyers will likely begin accumulating in this zone, but I have a really hard time looking at this drop down thinking it's not going to have another one. So looking for a secondary sell leg to the downside in the overnight going into tomorrow. Then we jump on over to crude oil. Now, crude oil held the inside of that channel really well. It's tough to be upset with a channel that looks like this. We had that A to B point copy-pasted up for C, looking for D. We had that test up here, beautiful test, and when they broke back inside of it, they held it as resistance and turned back down again. So obviously, a lot of traders are taking profit up here, whether they're buyers from all the way down at 60.50, or if they're buyers that just jumped in. Doesn't really seem to matter. Everybody's jumping out and taking some profit at those highs, and that's causing a little bit more of a pullback. Now, unfortunately, it does give us a situation that we're not looking as strong for a spike in channel. A spike in channel would have been a little bit steeper, and we're kind of breaking down from that. And this is a pretty heavy bear drop. So with all of that in mind, it looks more like we're gearing up for a slightly deeper press to the downside. 64.55 is the next level of support, but it wouldn't necessarily be a surprise to see them try to break below that kind of, after they had that big spike up into the channel, see them break below that channeling point would not look that bad, honestly. So that's kind of the next area that we're looking for here on crude oil, looking for a low at around 64.11 as support, and maybe even a dip down to 63.62. So in the overnight session, looking for a little bit more bearishness to continue to at least 64.55, and then from there, we'll have to wait and see what kind of decisions they want to make. And then the S&P. Man, the S&P, now it is bouncing back a lot going into the afternoon session, kind of ending out the day here after the 4 o'clock close, but there is just a huge amount of bearishness today. The sellers smashed the market to the downside. We've blown through pretty much every level of support that the market had. We missed the level of support at 25.95 by just a couple ticks. The low of that candle to the downside was at 25.96, so it literally missed that support by a point. I don't think it's done yet, and again, like I've been saying for the past month, 2 months, I don't think that the bulls are out of the hot water yet. I think the bears definitely still own this market, and they're trying to drive the market lower to retest those lows. 25.40 has a big hot seat on it, and I think a lot of sellers are going to be looking for that move. Now, to be fair, I did think that we were going to get a slightly larger correction. Honestly, it did look like we might have some juice to the upside to kind of overcorrect after they had that double push to the downside underneath the channel. But never showed up. We ended up just rolling right back over and smashing down. So obviously the sellers are fully intact. They are still selling very aggressively. And there's now a little bit of an open distance here, right? This swing low that we broke out of, I wanted to see the market kind of reclaim that because as with a normal trend, you have the up move, pullback, and it usually pulls back to retest those areas. It's a breakout pullback. It's a common healthy trend. Not to say that this isn't healthy, but we have a lot of bear pressure, so much so that it's leaving behind these distances. It's sort of like a gap. It misses that swing low, so this creates a zone of interest. If the market does regain movement back to the upside, that's going to be a big sell sign for the market to try to push right back down again. So in the situation that we're in at the moment for the S&P, obviously it's heavily bearish. I'm going to be looking for continuation selling, but at the same time, playing it a little bit cautious with the understanding that we might get a bounce back to fill in some of that gap that's happening inside of here from this kind of low to these highs, creating an area of interest that may or may not come in handy in the next coming days or so. I mean, with the amount of back and forth that we're seeing right now, it's tough to say which way we're going to go, but there is plenty of bearishness going into tonight, that's for sure. So looking for continuation selling to the downside. Now, looking at the overall news for tomorrow. Now, the news for tomorrow, we do have a couple things going on. At 8:30, we have the GDP forecasted for quarter 4 at 2.7%. At 10 o'clock, we have the pending home sales month over month for February forecasted at 2.1%. And then at 10:30, of course, we have the crude oil inventories forecasted at a really tiny negative 0.287 million. Now, again, we will have the API a little bit later today in about 25 minutes or so. That'll give us a better clue in terms of what to expect for the inventories going into tomorrow. But at the moment, we have a decent news calendar tomorrow. After such a huge day of movement today, might have a little bit of a hard time finding a good leg just because, well, a lot of moves are already done. I mean, we just went back-to-back huge days. We had a huge up day and now a huge down day. And they're going to have to take a break at some point. And, well, what better day when there's a bunch of news going into a holiday week, about halfway into it now. We'll have to wait and see. But, as always, like we always say, it doesn't matter what market you're trading. Always make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all.